87.7% of individual FNO traders lost money in financial year 2026. That's almost 9 out of every 10 traders. But here is the interesting part. Compared with financial year 2025, the percentage of loss-making traders actually improved. So why are we still seeing such a huge number of individual traders losing money in FNO? Is FNO itself the problem? Is options trading the problem, or is the real problem the way many individual traders approach the market? Today, we are going to look at least SEBI financial year 25 and 26 data and try to understand what it actually means for an individual trader. Hello everyone, welcome to No Chart Finance English again. SEBI has recently released two studies on India's equity derivatives segment, one covering for profitability and another covering the trading behavior of individual traders for financial year 25-26. And in this video, I don't want to simply repeat a headline. I want to break down the numbers and then discuss what an individual traders can actually learn from them. Let's start with the headline number in financial year 2026. 87.7% of individual FNO traders incurred net losses in financial year 2025. The figure was around 90.9%. So yes, the percentage improved. But even after that improvement, nearly 9 out of 10 individual traders still lost money. And this is the first important lesson. Don't look at FNO and think everyone is losing, so FNO does not work. And don't look at the data and think I'll simply find the right strategy and make easy money. The data is telling us something much simple. FNO is a high risk market and the outcome for individual traders has been poor. Now let's look at the total number. Individual traders collectively recorded a net loss of approximately 91,685 crores in financial year 26. In financial year 25, the figure was approximately 1.12 lakh crore. So aggregate losses fell by around 18%. But there is another number we need to look at. The number of active individual traders also declined. Financial year 2025 had around 1.06 crore active individual traders. In financial year 2026, that numbers fell to around 87.5 lakh. That's an approximately 18% decline. So fewer traders, lower aggregate losses, but average loss per trader actually increased. The average net loss per individual traders rose to approximately rupees 1.17 lakh. That's around 2.4% higher than the previous year. So we need to be careful when interpreting the headline. Total losses went down, yes, but the number of traders also went down substantially, and the average loss per individual trader actually increased. So lower total losses don't automatically mean individual outcomes became much better. Now let's look at something especially relevant for options traders. SEBI's study shows that options continue to dominate individual participation. About 99.3% of individual traders participated in options at least once during financial year 26, and approximately 93% were classified as only options buyers. More importantly, options accounted for around 92% of individual traders. Aggregate losses. Now please understand the distinction. This does not prove that options are always bad, and it does not prove that option buying can never be profitable. It tells us that options represented the overwhelming majority of individual participation and losses in this dataset. That is a very different statement. Now we came to one of the most interesting findings SEBI's trading behavior. A study looked at how frequently individual traders participated. Traders active for more than 100 days accounted for approximately 94% of turnover and 87% of losses. Their average loss was around 2.76 lakh compared with around 22,000 rupees for traders active on 100 days or fewer. But here is an important point. This does not prove that trading frequently automatically causes losses. It is an observed relationship in the data. Frequent traders may also have different strategy, capital levels, exposure, and behavior. So we should not turn correlation into causation. But the message for an individual trader is still important. More trading means more exposure, more opportunities for mistakes, and potentially more transaction costs. So, after seeing all these numbers, what should we actually learn? Lesson number one, you don't have to trade every day. The market is open almost every trading day. That does not mean you need to participate every day. Lesson number two, more trade don't automatically mean more profit. If your strategy does not have a genuine edge, doing it more frequently does not create one. Lesson number three, options are not simply about predicting direction. You can be right about the market direction and still lose money because of time, volatility, premium speed of the move, and this is especially important for option buyers. Before taking an FNO trade, ask yourself, how much am I actually risking? Not how much can I potentially make, but how much can I afford to lose? Then consider position size, leverage, trading frequency, capital, market volatility, and your ability to handle a losing streak. Now imagine this. You lose 5,000 rupees and your mind says, I'll recover in the next trade. Then you lose another rupees 5,000. One more trade and then another. This is where trading can turn into revenge trading. And there can be another psychological problem too, that called FOMO. Overconfidence, over trading, loose chasing, and sometimes the inability to stop. Now let me share my personal perspective. I am an option buyer, but I don't believe that being an option buyer means I have to trade every day. For me, capital protection comes first. If the market gives me a setup that fits my plan, I may trade. But if I don't see what I am looking for, I can simply stay out. And after a good profit, I don't automatically look for another trade. Sometimes I simply stop. This is my personal trading approach. I'm not saying that everyone should trade this way. Every trader has different capital, strategy, and risk tolerance. This is very important. SEBI's data does not say never trade FNO. It also does not say every individual trader will lose. And it certainly does not tell us which strategy you personally should use. What it does so is a very large proportion of individual traders have historically incurred losses in equity derivatives, and that makes risk management extremely important. So, if I had to summarize the entire SEBI data in one sentence, I would say don't confuse market participation with trading success. You can trade every day and still lose money. You can take fewer trades and focus more on selectivity and risk management. The number of trades is not the definition of success. Your process matters. Let's quickly remember the key numbers. 87.7% individual FNO traders who incurred losses in financial year 2026 91,685 crores. Aggregate net loss of individual traders 1.17 lakh. Average net loss per individual trader around 92%. Share of individual aggregate losses attributed to options 94% of turnover and 87% of losses accounted for by trader active more than 100 days. So why do most individual FNO traders lose money? This SEBI data does not give us one magical answer, but it gives us several warning signs. High risk derivatives, heavy options participations, frequent trading, leverage, trading costs, and human psychology. So before your next FNO trade, don't only ask how much can I make. Ask yourself how much can I lose? Can I handle that loss? Do I really need to take this trade? And most importantly, am I following my plan or my emotions? If you found this analysis useful, like this video, and if you want me to make a detailed video breaking down how frequent trading, options buying, and trading costs can affect an individual trader, comment below SEBI. And if you want to practical education on FNO, options, risk management, trading psychology, and market behavior, subscribe, follow to No Chart Finance English now, because here we don't treat trading like a gambling. We focus on knowledge, discipline, and risk management. Thank you for watching. Trade with a plan, not with emotion.